Welcome back. Time now for Top Picks with John Zechner. Top pick number one, a company that you briefly mentioned in one of your answers, John, Alphabet, the parent of Google, ticker symbol GOOG on the NASDAQ.
Yeah, I don't think you want to be without tech stocks, despite some of the risks people see sort of for the long term. And these guys, if I go to a single player, these guys really fit the bill. I mean, trading at basically less than a market multiple, huge cash on the balance sheet. They're dominant position, obviously, in search. They own that. Online advertising, which they and Facebook Meta really control completely, and Meta sort of more into a fading profile there. They're big. They've got a good number 3 player in cloud. They got some other things that nobody ever talks about as well. They own the Android operating system, which basically runs all the non-iOS cell phones in the world, basically. They give it away, but if you ever tried to monetize that, Waymo, some of the other YouTube, I mean, I think they paid $1 billion for YouTube. I think YouTube had $1 billion operating cash flow last quarter. So it's, these guys are a great play. It's well-diversified technology. There were some worries that have brought it down this year that obviously they're big. The advertising market is huge for them. People are worried about slowdown in advertising. I think the numbers last quarter showed it, it's an impact, but it's not a dramatic impact. So put it all together, it's a great story at a decent valuation. Somebody was asking me for like legacy long-term picks earlier in the show, and I think this one fits the bill perfectly.
Okay, number 2, General Motors, one of the big 3 in Detroit.
Yeah, and we've talked a lot about the auto parts manufacturers and why I like them. And General Motors, it's sort of ditto on that whole story. I mean, the stock trading at 7 times this year's earnings. I mean, the market cap is ridiculous at $55 billion compared to, Tesla, which got over $1 trillion, even though GM makes 6 times as many vehicles in a year and has been doing it for over 100 years versus Tesla. Yeah, I know Tesla's got a better growth profile, but I think GM will do a good job of migrating to EVs. Mary Barra's got a great plan over the next number of years of bringing not only their expertise in manufacturing, but also their brands across to the EV side, whether, it's a Hummer, Suburban, other models are going to bring them across as well that already have, customer recognition on that at a low valuation. And I think they will do this migration. People don't believe they can do this migration effectively. But I think at this valuation, you're just not, you're not paying for it. So the risk isn't there.
Okay, and top pick number 3, a stock that's doing pretty well today. I have it as the number 8 most influential advancer on the S&P TSX Composite Index, Agnico Eagle Mines, one of the country's premier gold miners.
Yeah, and the gold stocks have really, as any investor who owns them, has been a real disappointment in the past year. Like, obviously, the headwinds of rising interest rates and this, such a strong U.S. dollar have been a real headwind for gold and commodities, some commodities, but gold in particular, and that's brought the sector down. Valuations have compressed. When I got into business, Paul, these stocks used to trade at 3 times net asset value and probably 12 to 15 times cash flow multiples. Most of them are trading today about a 5 cash flow multiple and then at a discount to net asset value. Agnico is sort of a go-to name in the sector, less political risk because of most of their properties are in Canada, North America in general, and Australia. So you don't have some of the sovereign risk that some of the other players do. They recently did the merger with Kirkland Lake. That obviously added the Detour property, which Kirkland Lake had bought, 2 years prior to that. So, good, decent profile going forward at a good valuation. Like I say, the gold, I think gold should do better for the simple reason. I think the U.S. dollar is closer to a peak. Interest rate differentials are going to start to narrow from the U.S. versus the rest of the world. I mean, you saw this morning, the Bank of England raises rates, ECB's raising rates. U.S. is maybe probably later in the cycle of raising rates. They start to compress. The U.S. dollar is going to come off these peaks. To the degree it does, you can see quite a move in gold in particular and in commodities in general. And, I think you've seen a little bit, is certainly even in that slight move off the peak of gold when it went from under 1,700 to over 1,800 in, a matter of days. So, cross my fingers on that one, but I like the play and I like the sector in here. It's cheap.